Hello, everyone, and welcome to Barrons. I'm Andy Serwer, and welcome to our guests, Harvey Schwartz and David Rubenstein of Carlyle, which is, of course, a big global alternative asset management firm. And Harvey, you're the CEO. I want to start out with you. You came to become the CEO about 23 months ago.
Almost a 2-year anniversary.
Almost 2 years. And there was some management turmoil. You stabilized that, I'm sure. What is the strategy going forward at this point?
The strategy is pretty straightforward. You know, when David called me to join the firm, obviously I knew Carlyle. It's an iconic firm. It's had a very unique place in financial history. Private capital today, as you all know, is growing dramatically. We've been growing dramatically. We've had record assets, up 17% last year, record financial performance, record inflows. But more importantly, what is the strategy? The strategy is making sure that we deliver excellent performance across the 450 billion global platform, whether that's in credit insurance, which is our largest category, traditional private equity, which David's one of the founders literally of the asset class solution, or in our secondaries business. And of course, this marketplace is incredibly dynamic right now, whether it's in private capital in the form of lending, whether it's the wealth channel, which is literally exploding around the world and in very early stages. So, our strategy is global domination, Andy. Yeah.
Well, yeah, there you have it.
But I mean, that was part of what, when David met me, he said, look, you can have the job, but global domination is what I want. I said, okay, it sounds good.
David, you like an ambitious CEO like that. I mean, one not holding back.
Harvey has dramatically improved Carlyle. Our stock has hit a multi-year high today. It wouldn't have happened without Harvey. And it goes to show you my own theory that says that if you have a really great CEO, he or she can make a gigantic difference in a company, more so than one political figure can make a difference in a country. One CEO can dramatically change things around, and Harvey has done a great job at it, and I'm one of the big beneficiaries as maybe the biggest shareholder. So I'm very happy. I just wish we had more Keyman insurance on Harvey. But I don't think I can buy enough Keyman insurance on Harvey. He's done a great job, and we're very happy, and everybody in the firm seems to be happy with where the stock is and where the company is. And also our clients and investors are very happy with Harvey.
It seems like you had some shareholders clapping there at one point. I'm sure you got a couple.
They should be. Anybody that bought the stock recently should be very happy.
Hey, how do you two guys work together? I mean, you're the leaders of the firm, CEO, co-founder, co-chairman.
I prefer to be the comedian. David's the straight man, but sometimes he's funny, and then I have to be the straight man.
You have different styles of humor. I've noticed that.
Mine's just better. So how do we work together? So you mentioned this. And this happens in lots of industries, lots of firms, there were some challenges in CEO succession. When David brought me in, one thing I knew for sure is the institutional history that David had with our clients globally, our team, and I inherited an extraordinary team. So I'm quite privileged to have this opportunity. And I've worked for some extraordinary firms, Citibank, Goldman Sachs. So I've had a very fortunate career in finance. But the founders own 30% of the company. And what was most important to me was to get the founders back engaged in the firm. This is not a particularly revolutionary idea. They have all the institutional history. We're talking about some of the most talented relationship builders, strategists, investors in the world. And so, I don't know, they've been fantastic. They've become great partners, business partners, and friends. I don't know, David, how do you see it?
Well, look, the Chinese have a curse, I'm told. It says, may you be condemned to live in a time of transition, because transitions are difficult. And when you transition from founders to their successors, it's never perfect. We had a transition, didn't work out as well as we would have liked. When we made the transition to Harvey, it worked out extremely well. So Harvey is running the company. He's got a management team. He talks to other founders and me once a week. We get briefed on what we're doing, what he's up to, and give him our points of view. If he wants it, fine. If he doesn't, that's okay too. And then try to go out and meet with the people that know the firm and know us, the founders. And so I spend the time at Davos, but Harvey's spending as much time as I'm spending here. And I think it's a very good combination.
Well, who wouldn't want to tap into David's expertise? I mean, his storied career, you're a legend in the business, and in fact, in our society writ large. I mean, you just won the Presidential Medal of Freedom. Congratulations on that. It's a real Incredible.
Well, they were looking for an old white guy in private equity, and here I was. I lived in Washington, so they gave it to me.
Boom, yeah. And well,
Maybe David's funnier, but I will say it is worth noting. Obviously, it's the highest civilian honor in the United States, but I believe he's the only person ever in finance that's won it. So we are all quite proud of. David's very humble about it. We do an internal call every other week with all the partners, and I lead it, and we go around the world, and David participates, and I said, where's your medal? And he said, I don't know. He was doing it from home, but he left the camera, came back with the medal, and he's that humble about it, which is pretty extraordinary.
That's truly awesome. And you're right about finance. I mean, that's not first on the list if you think about it in the White House very often, although maybe it should be. I want to ask you about Washington. You spent a lot of time there, and I know you're familiar with the workings of that city, of our nation's capital over in the United States. New administration. You obviously have a read on what's going on there, David, and I wonder what you think is in store. What do people not realize about the Trump administration?
Well, the new Trump administration is different than the old Trump administration. Last time around, I don't think Donald Trump really thought he was going to be elected president. I think he was hoping to be elected president, but I think he was surprised on election night. And therefore, he had to put together a administration pretty quickly. He had Governor Christie in charge of the transition, but he was dismissed, so they had to start from scratch. And he listened to a lot of people who said, this person looks the right part, this person has the right background, this person is a famous person, and he brought a lot of those people in. He found that they weren't quite simpatico with him in many ways, and so he had some turmoil. This time around, he has the advantage of having been president for 4 years. He has people that are clearly loyal to him. And he has one other advantage, which hasn't been commented on yet very much. We've only had one other president who did not serve 2 consecutive terms, Grover Cleveland. Nobody here probably remembers that because he was elected second time in 1892. But when you have a second non-consecutive term, you come in with the experience of having been president, you have some fresh time to have reflected on it, and you bring people in who are fresh. Very often our second terms in presidential administrations in our country haven't worked well because maybe people got tired and they just weren't as enthusiastic. Maybe the president got tired. So Richard Nixon's second term didn't work out so well. Ronald Reagan had Iran-Contra, didn't work out so well. Bill Clinton was impeached. So second terms that are consecutive may not be perfect. We're doing an experiment now to see whether a second term that is not consecutive is actually maybe better than a second term that is consecutive. Donald Trump is much more self-assured, in my view, much more self-confident than he was before, and much more knowledgeable about government than he was before. Everything he does is not something that everybody will agree on, but I think he has a lot of convictions, and I think he's going to surprise a lot of people.
Yeah, that non-consecutive term thing, that's an excellent point. I hadn't considered that. It's fascinating. I want to switch back to you, Harvey, and ask you a little bit more about the business and the alts business. Very competitive. Rates are up. It's a tougher environment than it was, 5 years ago, pre-COVID. How are you going to manage that?
Yeah, so the macro environment for us is not so much driven by rates up, rates down, but it's driven by the global macro environment. And many years from now, I think we'll look back on this period of history, and what we'll see very clearly is the very tight proximity of the GFC, the global financial crisis, and the pandemic really shifted some trends that were more or less in place. I'm 60, really since I was born. Declining interest rates, no inflation, globalization. And I think we'll look back on this period and say, this was an incredible shift in the way the global economy is behaving, interest rates, inflation. These are topics that really weren't on anybody's radar screen a couple years ago. From our perspective, our responsibility is we don't look to avoid risk per se. Our clients, whether they're wealth clients around the world, institutions, sovereigns, pension funds, they just want us to seek risk and make sure that we price it correctly. And rates being up, in my mind, rates being up is a good thing. I do not understand the recency bias of a generation that thinks zero interest rates are a normal clearing cost of capital. For all the finance people in the room, for all the finance geeks, that's not a healthy market environment because we're just talking about extended central bank manipulation. We need a clearing cost of capital that actually provides proper returns. So for us, it's the opportunity is quite rich in terms of opportunity. But that is about the opportunity set globally, but also because there's a need for capital. If you look at our portfolio companies, we have about 1.1 million, 1.2 million employees around the world in our portfolio companies. They're doing really well. EBITDA is growing about 15%. They need capital. Companies we deal with need capital. And so particularly as we go through this period of time, I think it's a very unique time for private capital, and that's why as an industry we've been growing so quickly.
About 450 billion AUM at this point. David, I want to switch over to you and ask you about your take on the investment outlook going forward to 2025, 2026, and particularly maybe if you're a retail investor,
Okay.
what do you think?
So, obviously, the economy is in pretty good shape in the United States, despite what was said in the campaign. We have very low unemployment. We have inflation, which is not yet at 2%, but it's within sight. Maybe it's closer to 3%, but it's within sight at 2%, which is the Fed's target. We have GDP growth this year, which should be probably 2.5, 2.6%, something like that, maybe 2.7. So I think the numbers are pretty good. The biggest challenge we have economically are not ones that people feel every day. They are, the deficit is still too high. We have an $8 trillion annual budget, and we're running about a $2 trillion deficit. Maybe Elon Musk can change that a bit, but it's going to take some time. We also have too much debt. We're servicing debt. We're spending roughly $1 trillion a year on debt to service the 36 trillion we have. So those are some challenges. But let's be honest, the United States is lapping the rest of the world economically in terms of technology, in terms of the financial markets. Since, let's say, COVID, the United States has gone past Europe in GDP by a factor that's very considerable. But Europe has about 250 million people, 230 million people more than the United States. Yet, and for that reason, they had a bigger GDP for much of recent history. Now, post-COVID, GDP of the United States is more than 25% above where Europe is. And as a result, the United States is just doing such a spectacular job that I think of the places to invest in the world, there are a lot of good places, but the United States is by far the best because of the rule of law, transparency, quality of managers, quality exit opportunities, financing opportunities. There are other good places, but I think the United States is in pretty good shape. And for retail investors, the most important thing for a retail investor is not to try to be Warren Buffett. Maybe you're really going to be lucky and you'll get a good return one year or so, but as a general rule of thumb, if you're really good at being a lawyer, really good at being a doctor, do that and don't try to be an investor. Pick people that know what they're doing and let them do it for you with reasonable fees, reasonable transparency. So for the retail investor, get somebody that actually knows what they're doing. Make sure you understand the rate of return you're likely to get. It's consistent with your philosophical and ethical views and what they're doing, and then let them do that with reasonable fees. And that's what I think people should do generally who are reading Barrons and other things and not try to be Warren Buffett.
I like that you got them reading Barrons, David. Thank you so much for that. Harvey, over to you. Speaking of retail investors, a lot more investments in privates being made available to retail investors. Is that a good thing?
I think it's a good thing in the following way, which is, going back to David's point, for the wealth client or the retail investor, what they really want is access to diversification, working with people they trust. And so I think it's good for a number of reasons, particularly because it's just another option in the toolkit. It will not be good for every retail client. And I'm sure Barrons would say that. But for many retail clients, the options of earning more income in private credit, marrying that with liquid credit. I think these options make a lot of sense. If you think about retirees and what will ultimately happen in terms of the retirement channel, we deal with pension and retirement funds all around the world. They run portfolios in liquid assets, bonds, stocks, and private markets. There's no reason why, if it can be packaged in a way in a solution that makes sense for the advisor working with a client. I think it's a very personal choice. I think, of course, that should be available. It wasn't that long ago we didn't have ETFs. That's a standard part of the toolkit. Right. I think these things are all just becoming standardized part of the financial management toolkit. I think the most important part of the backdrop are the points that David raised.
Right.
Well, figuring out what makes sense for the individual investor.
Look, for the last 30 years or so, when every single year, private equity performances, various types of private equity performances, could be venture capital, growth capital, private debt, have outperformed the public market indexes for 30 years in a row. Who is investing there? It's the wealthy people, the big pension funds, the sophisticated people. Why should the people that are not as wealthy not get the benefit of those rates of return? We have an ass-backwards system in the United States. If you went to Harvard and you're really smart, you major in economics, you minored in finance, and you go to work for Teach for America because you want to give back to the country, you don't have any money, you're borrowing money to go through college, you can't take your IRA, your 401k, and put it into a private equity fund. If you're an idiot, and your father gave you $100 million, and you barely graduated from college, or maybe didn't even go to college, you're a qualified investor, and you can piss it all away. It's an ass-backwards system. We should want to encourage people that don't have the money and don't have all the assets of somebody that inherited a lot of money, to let them get the benefits of private investments, and that's what I think we're going to be doing. Right now, there are roughly $14 trillion in IRAs and 401ks, and it hasn't yet been tapped for the private market. And clearly, you can put 5 or 10% of your 401k or IRA in an illiquid investment without, I think, ruining your financial future. So I think that's a change that's going to happen, and I think it should happen, long overdue.
I would say one of the fastest growing part of our business is this channel. Mm-hmm, right. So we have 2 solutions out there now, one in credit, one in our secondaries business. We're launching a number of other ones globally, and the market participation and the enthusiasm from clients around the world is really remarkable.
For that reason.
Why do you think the private equity firms have grown to be so big? It's not because of the charm and good looks of the founders, as considerable as that is. Yeah. It's really because the rates of return have been really good over these years. That's how these firms have grown. It's not because they're so charming. It's because of the rates of return, and that's why the smaller investors should be able to get access to it.
All right, maybe David's funnier.
I do want... that was pretty good. I do want to get to the charming part, quite honestly, David, and I don't want to sound obsequious, but, it's pretty amazing when you read your bio. I mean, you have so many interests: board chairs, Kennedy Center, Smithsonian, Duke, National Gallery, Econ Club of DC, so much philanthropy, Baltimore Orioles baseball team. And I guess my question is, how do you decide what to do in the morning?
Well,
you get up and you have all these things in front of you.
Well, I'm actually I'm a triplet. So I actually have 2 brothers, and they do this stuff, and we just don't tell who's doing what. No, actually, I love everything I'm doing. The problem is when you get to be my age, you realize you can't do everything the way you did before, so you have to pick and choose. But I'm not doing anything I hate to do. I love it, and when you love it, it's not work, it's fun. So the pleasure of my life is I've been able in the last 30 years or so to do things I've loved doing, and so when you love it, it's not such a challenge. And, sleep is overrated anyway.
How many hours a night do you sleep?
I interviewed Jeff Bezos once. He told me he gets at least 8 hours every night, if not 10. And I said, oh my God. No, I try to get about 5.5 hours. When you get to be my age, it's hard to sleep 5 hours consecutively. But I would say I can sleep about 5 hours. That's enough.
You have that to look forward to.
Yeah. David and I have traveled the world about 10 times in the last 2 years, and I have a very bad knee, and the most frustrating thing is he does this all the time. He says because it's easier for him. Like, he runs up the stairs everywhere, and then I hobble up behind him, and I think it's a bit of a power move. He's just making sure I know he's older but faster.
Yeah. It's working, I guess.
Look, I'm now 75, too young to be president of the United States. So, but in a couple of years, I'll get more experience and gravitas and some gray hair.
Yeah, sign me up. Let me ask you about the firm versus the competition. KKR, Apollo, what else we got out there? Blackstone.
Great firms.
All of those guys.
Yeah.
How are you differentiated from them?
I think there's a lot of similarities in those firms. I think what I think is special about Carlyle, and they're great firms, what's special about Carlyle, the founders, the people, the history. David, really one of the first to be iconic in Davos, okay, was the first to go to the Middle East. A lot of people say that. It's not true. David went to the Middle East with Bush and Baker when he brought him into the firm. And so I think there's a history, but I will say I've worked with some extraordinary institutions, and in our business it's very competitive, but what makes firms great is if you have great talent. And what makes great talent in our business is you have to be smart. It's a prerequisite. We can get super talented, smart people. You have to work hard. It's a hard-working business. You have folks like David they're out there every day doing what they do. Level of care is something I don't think can necessarily be taught, but I think the founders and Carlyle have created an institution where people care about each other and we really care about our clients. And so I think that's, our secret sauce. We're working hard.
So I would answer the same question with one word. Better. Just better. Just better than everybody else.
Okay, well, people signing up on that, I guess it works. Let me ask you a little bit more, David, though, about Washington and then also being here in Davos. How should non-Americans think about America today?
Well, clearly, when Donald Trump was elected the first time, there was a lot of uncertainty about what he was going to do, and then later there was some fear around the world, and I think the relations in some parts of the world were not very good. Europe is probably the principal part of the world where I think relations were not as good as maybe the Europeans may have wanted it. I think today, I think the relations around the world that Donald Trump is likely to have is probably going to be reasonably good in some areas. I think that, while I don't speak for him, I do know him. I can't speak for him, though. I would say his relationships are unique in the sense that he's probably the only major politician who gets along well with people who are the leaders in Israel and leaders in the Gulf countries. He has had pretty good relationships over the years with Japan. Prime Minister Abe is not there any longer, of course, but I think he's got good relationships there. I think he's also likely to do something in China that might surprise people. I think he's going to try to meet with Xi Jinping in the relatively near future, and I wouldn't say it's a foregone conclusion that the relationships will not get better. I think it might get better. So I think people around the world should give him some chance to show what he's going to do. Some things he's going to do that I'm not going to like or other people aren't going to like, but overall, judge him for what he's done in the first 100 days, 200 days or so, and see. Nobody knows for sure whether there's going to be any crises for sure. If things are unexpected, President of the United States always have to deal with unexpected things. But if we can solve the problems in the Middle East, solve the Russia-Ukraine problem, tamp down any China-Taiwan talk, I think that will be a good thing, and maybe he deserves some credit. But I do want to say that I think President Biden did some really good things, too. I don't want to say he was terrible at all, like some people say in the business community. He actually got the unemployment rate down to a very low level. We've had an enormous amount of jobs created. Inflation was a problem for sure. It's now down a fair bit. But I think the Jobs Act, the CHIPS Act, and the infrastructure bills are the benefits for which are going to be seen in the future, I think are really historic bills, and I think are a good thing for the country and the world.
Can I give you a short answer on that?
Please.
I think Europeans should root for America, and I think America should root for Europeans. We've been, for example, in Japan, we'll celebrate our 25th anniversary. We have offices in London, Frankfurt, in Germany, Italy, Spain, France, and we're going through this period of, a bit of delinking and globalization, and so a lot of talk about onshoring. But if we were having a discussion right now about the U.S. going to a steep recession, I can think of nothing that would be worse economically for the world. And so I would hope Europe would be rooting for America's success, and Americans should be rooting for European success. As long-term allies, nothing would make us happier than if Europe growth was on pace. I think it'd be great for everyone. And so I think even if there's a bit more nationalism in the world, I think everybody should root for each other. And competition will always be fierce, but I think it should stay healthy. That's what I would root for.
And David, what do you think about President Trump's tariffs?
The Secretary of Treasury designate, Scott Bessent, said publicly that it was a maximalist position, which is to say that is what we might do if we can't get other things we want. President Trump is very transaction-oriented. He's more transactional than many presidents I've known, and I've known a lot of them. He wants to get deals done, and he believes in kind of negotiating. And in negotiating, you sometimes huff and puff, and you say things that are designed to put people off balance or to make people think you better do a deal with this person. So I think the tariffs are not likely to be as scary or as significant as some people may have thought. But again, I don't speak for him, but I think what Scott Bessent said was really true. It's really something that probably will be a good negotiating tact, and I think it's already worked to some extent already, because many people are coming to the United States, foreign leaders are talking to the new incoming administration, say, what can we do to improve the relations? And I think they want to forestall tariffs. So that's what I think about the tariff situation.
Okay, Harvey, tell the audience why they should own or buy CG stock. I know it's at all-time high. popped just a couple days ago as well, right?
Yeah. So, well, when I joined the firm, I broke out a pencil and paper and I did some analysis. And obviously, the decision was less simple than this. But part of the decision when I sat with David and the founders, and I said, listen, I'll come on board, but I basically want to be paid 100% in stock. Because I know the value of the enterprise. And if you look at our multiple today relative to the peer group, it's contracted. But even if we just move to the multiple, because there's some hangover from years past, I don't know, the stock's up $20, $30, $40. But I think it's a great industry. It's a fantastic team. It's an extraordinary global brand. And we still have guys like this working with us every day. So, I'm not selling anytime soon.
The multiple, the PE multiple of the stock has trailed historically some of our peers. So if we had a multiple that were even as close to some of our peers, and they're very good firms, I suspect the stock will continue to see a lot of upward movement.
And we're just better.
That's the tagline, Carlyle.
Just better. Yeah.
I got a final question for you, David, and that is Presidential Medal of Freedom. You're sitting there with Denzel, Magic, Anna Wintour. What'd you guys talk about?
Hillary. You know, it
What was the
reminded me,
conversation?
we were in the green room before. And one time I interviewed President Bush and President Clinton. In the green room, I said to both of them, I said, by the way, when presidents get together, what do they really talk about in the green room? And he said, we talk about one thing. President Bush said this. Talk about when's this event going to start and when's it going to end? So
Lionel Messi was there too. I forgot Lionel Messi.
Well, he got the award. He didn't actually show up. But I think my children showed up because they wanted to meet Lionel Messi and Bono and the others. And they said they wanted to show up for me, but I don't think they were that interested in seeing me. Look, it's a great honor. Everybody would like to get that, the highest honor in your own country, and for a civilian. So I'm obviously honored. I wish my mother was alive to see it because she's the only person I know who actually thought I deserved it.
Well, I think there's probably some other people out there as well. Please join me in thanking Harvey Schwartz and David Rubenstein. That was terrific.
Everybody, thanks so much.
Thank you.
Andy, thank you. Great to be there.